Welcome to the B.F. Anderson Technical Report for June the 10th. Nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you've invested. This is a quote by Peter Lynch. In other words, trying to predict is such a waste of time. So trend following is where we're looking at the data only. And so we're going to talk a little bit about interest rates. We're going to talk a little bit about inflation because the data says something very different from what the media is saying. So in other words, don't fight the Fed. You want to always listen to the Fed. And the Federal Reserve right now is saying that the inflation that we're experiencing is transitory and temporary. So let's take a look at the numbers as we get into the video, and you'll see what I'm talking about. Now, when it comes to the market, the Nasdaq is showing some good improvement here. We're above the 50-day moving average. The 10-day has, crossed above the 50-day. We are in an uptrend on the Nasdaq. So growth stocks are starting to show very good improvement. Here's the mid-cap stocks. Now, we're not making new highs, but we are above the 10-day. The middle-sized companies are looking fine. Here's the New York Composite, which has been one of the strongest indexes out there. Continues to stay above the 10-day. We look good there. Small caps, same thing. Small caps have actually broken out and making a new high. Look very constructive above the 10-day moving average. This is definitely a bull market. So here we have the S&P 500, which is the large cap stocks above the 10-day moving average, looking very constructive. Now, I'm adding another index, which is actually an ETF, that really ties more into growth stocks. This is the Russell 2000 Growth ETF. This is where they're taking the growth stocks within the Russell 2000, which are small cap. And you can see here that it's had a really tough time, really since February. It's been in somewhat of a downtrend, but we're starting to see improvement here, and we have broken above the 50-day. 10-day is trying to break above the 50-day. Again, this market is looking very productive. Nasdaq on a more intermediate term basis or long-term basis, this is really our best indicator. This is the 35-week moving average. You can see that the Nasdaq continues to stay above the 35-week and is close to breaking out to a new high. So this indicator looks just fine. Now, on the aggression index, seeing much improvement there. Now, I took away the daily because I replaced it with the Russell 2000 Growth ETF. But this is the aggression index, which is comparing the Nasdaq to consumer staples. We're seeing a lot of improvement there. We've gotten above the 10-week moving average. We came down, tested the 40-week, held, and now breaking out above. So we're starting to see where risk on is starting to pick up. Now, on our three economic indicators, now this is back to inflation. The 10-year Treasury note is at 1.494 right now, which it got up to over 1.7. So if inflation was really becoming an issue, I just don't think that the 10-year Treasury would be dropping in yield. Now, oil prices are above, for the first time, they're above $70 a barrel. So as you'll see in our top five, we continue to emphasize the production companies, the oil and gas production companies. Now, in the financials, they're somewhat rolling over a little bit because it does appear that interest rates are coming down. That doesn't help the group, but still pretty much in an uptrend. New lows dried up completely. We're in good shape there. No problem with new lows. Now, on the inverted yield curve, now remember, this is a leading indicator. We get the inversion, then we get the recession. We get the inversion, then we get the recession. So it is a leading indicator. So you really only pay attention to it unless you're getting an inversion. But it is also interesting to note that, the yield curve is in an uptrend, however, starting to show a little bit of hesitancy here. Now, on the bull-bear ratio, AAII bull-bear ratio, we're starting to get back into greed again, so things are somewhat frothy, just something to be aware of. The same thing on the put-call ratio. You see here where we're getting really deep into greed here. It continues to be a problem, but it can stay this way for a long time. Now, on the comparison of junk bonds to Treasury bonds, what we're looking for are where we start to see fears of recession. Now, when you see this particular ratio roll over like this, that's telling you that recession is probably coming. Now, we did get a recession back here, and again, back to the inverted yield curve, all this ties together. We are seeing some deterioration of this ratio somewhat, but be aware of the fact that the biggest problem for us would be bear markets and recessions tend to go hand in hand. So we want to keep an eye on this ratio. It's rolling over, but not getting into a downtrend. Now, on the volatility index, the VIX, we're in good shape. We're below 20. Things continue to stay calm, cool, and collected. So volatility is low. Now, on the back to inflation, this is what we were talking about earlier. I'm using a ratio here of the TIPS bonds, which are inflation-protected government bonds, as a ratio to the standard Treasury bond. Now, you can see here, ever since the pandemic, there's been a tremendous amount of fear of inflation. Well, all of a sudden, this is starting to roll over and break down actually below the 50-day moving average. So I really don't think you should fight the Fed here. Maybe what the Fed is saying is correct. This is transitory. We're not going to see hyperinflation. We may see inflation of 2-3%, but I don't think we're going to see double digit. Now, I went ahead and just to kind of another way to look at growth stocks, this is the ARK Innovation Fund. This is one of the hottest funds last year. Look at what it did. However, the fund has dropped dramatically, and this is a ratio comparing the ARK fund to Treasury bonds. You can see that there's been a lot of damage there, but we're starting to see the beginnings of maybe a new uptrend where we've made a low, we held the 200-day moving average, and we're starting to see a higher low. Now, what we need to see is a higher high. So growth stocks are starting to pick up steam a little bit. Now, on the top 5, again, I want to say that the market is emphasizing energy stocks. Now, you have to realize here that what's really going on is that these independent drillers, such as Devon, are not drilling like they used to. They're not spending a bunch of money on drilling costs. They're actually just producing their production. So all the revenues are falling to the bottom line in the form of profits. So they're paying off debt. And so what I believe is going to start to happen here is potentially a period of consolidation where these companies start merging and acquiring each other. So Devon, as you can see here, we got a gap up in the price, continues to hold the gap, looks constructive. Now here's Ford Motor Company. Now they just recently announced their Lightning F-150, which is an electric pickup truck. Their earnings were outstanding. This most recent quarter where they announced right here, the earnings were, they were supposed to earn like 30 cents. They came in at 89 cents. The stock has really moved up. However, pulling back a little bit, but continuing to hold above the 10-day moving average. Here's Marathon Oil. Here's another oil stock. Gap up, holding the gap, somewhat of a flag formation here, but we look constructive here. This is Nucor, which is steel. The steel industry continues to do well as demand for steel is really outstripping supply. But we can see here holding above the 10-day in a very constructive pattern. Here's Cimarex Energy, another oil stock where it has broken back above the 10-day moving average. 10-day moving average is turned up. So the energy stocks are looking good. The steel stocks are looking good. There's a lot going on in these categories. So if you have any questions, please give me a call. Thank you very much.